Hey everybody, welcome to Trading Futures with me, Anthony Crudele. On today's show, I'll be speaking with head trader and managing director at Convergent Trading, Morad Askar, CEO and co-founder of InvestiQuant, Scott Andrews, Kim Bachman, and Peter Rubnitz of Urban Oasis, trader and performance coach Dan Hodgman, and last but not least, futures trader Dani Sittloh. Welcome to Trading Futures. All right, everybody, kicking off this week's show with Scott Andrews. Scott, thank you for joining me.
Thanks for having me.
Tell us a little bit about your style of trading.
Sure. So I'm not a typical chart-based trader. I'm getting different ideas from the charts, but they got to be quantified first. And I'm looking for three things specifically. I'm looking for causation, some reason that I believe that pattern or setup may actually work in my favor. I'm looking for context of the market, both technical and non-technical context. And thirdly, I want confirmation from another market or another time frame.
All right, well, let's take a look at this chart that I pulled up on Tradestation. You wanted me to pull up a daily chart, regular session only, right?
Correct.
And you wanted me to box out a couple of days here. What are we looking at?
Yeah, so these are two trades I actually did. November 1st is on the far right, October 21st to the left, and they're the exact same setup. If you look closely, you'll see a red candlestick, and that is the setup. So we had sellers that day off the open. We closed lower, and then the next day, that's the trigger, we opened above the prior day high. On the 21st, we actually opened one tick above the prior day high, and then on the 1st, we opened a little bit higher. But what that means is that the shorts were stuck. Shorts that got in the prior day, expecting possibly this being the top, then had to cover, so that creates buying pressure at the open, and that's the causative nature, or at least the hypothesis in this particular setup. But like I said, I want to quantify everything first.
Yeah, absolutely. And let's take a look at this. So InvestiQuant is your software, and this is some data that shows us how that trade set up, right?
That's exactly right. So this is how I confirmed this hypothesis that I had 10 years ago. And you can see the data as it relates today. So looking back over the past 15 years, we've had a red candlestick, and we've gone, if you'd gone long hypothetically at the open, above the high of that red candlestick the next day and held all day, which I don't recommend without a stop, but it gives us a raw view of the setup, if you will, to confirm is there a directional bias or not. It's actually had a long bias that's played out every time pretty well. The odds are about 57% probability historically out of 173 trades, going long at the open, holding till the end of the day. And average win versus average loss, favored wins a little bit, so I always like to see that. And I've got a raw edge. I've confirmed the setup, and that takes me to step two, which is context.
We're going to get there in just a second, but
Sure.
For you being a quant, this is such a simple setup, right? Long if open, greater than the high of a prior red candlestick session.
Yeah.
And you just put that into your software, and it gave you back these stats, and that's why this trade is automated for you.
Exactly.
All right, well, let's take a look, as you said, an additional step that goes into the quant.
Sure. So there are plenty of good setups that have good edges over time, but it's always the context of the setup that really matters. And so for me, I'm looking specifically at technical and non-technical considerations. So, and I want to avoid trading against any known risk factors. That's always more important than the positives. So for me personally, I knew that I was going long, and one of my long tried and true and proven risk factors for going long is after new highs. So I don't want to go long on an up gap after new highs. So in this particular case, I added the price pattern of did not close after a 50-day high close because I didn't want to be long. That's a risk factor and would have reduced my results. And also know, and that's a price-based consideration, I did test different regimes, the trend, momentum in the market, and this is one of those timeless edges that has stood up really well, sort of regardless. However, there were some market event considerations and calendar considerations, the non-technicals. In this particular case, I never want to go long any setup on options expiration Friday if the gap is up. It's an event-based consideration, right? There has to be offsetting of the position as people close out their puts and the market finishes options expiration day tends to be bearish. So I didn't want to be long that day.
I love this because you're narrowing your focus in, right?
Exactly.
This is basically what we would call as day traders confirmation, right? Is that what this is?
That's right. Well, it's context. So
context.
Refining it even further, and then confirmation. I added the NASDAQ to the chart, so I ran the study. If you can go back to that prior chart.
Oh, sorry, I jumped the gun.
That's okay.
So you added the NASDAQ here. Oh, I see.
Out of the
Okay.
NASDAQ, and it hasn't performed as well. NASDAQ is in the orange, the ES is in the blue, but it's still confirming the directional bias. So it's a sister correlated market, not perfect correlation, but it did confirm this exact setup. So that increases my confidence even further. The third step to complete the confirmation, though, is I want to look at a different time frame if I can. So a great setup can be confirmed by a sister market and a correlated time frame. So in this particular case, I said, okay, what if hypothetically I went long after a break of the 15-minute range high on those exact same days? So don't get long at the open, just wait 15 minutes. If it's a true directional edge that should play itself out by the end of the day, then I can wait 15 minutes in most cases, I would think, common sense. Get long at a break of that high of the range, and it should make money as well. So that's what I ran in this case, and I took it a step further just to save time, and I applied a stop using 20% of a 5-day average true range, because we never want to trade without stops. So I thought it was important to make sure it could be traded with a stop.
Yeah, that's what I was going to ask you is how are you determining the stop? And you answer my question. And this trade, just so I'm clear, I think you said it already, you're holding it through the whole day, right? So the stop is the only thing working, and then you're selling on the close of the bell?
Or near the close, sure.
Or near the close.
Yeah, I will scale in and scale out.
Oh, so you are scaling in and scaling out
Of
as
trades in an automated fashion, even when I've done it manually, because it's impossible to get the perfect entry. So in general, maybe a few minutes before the open, a few minutes after the open, I'm anticipating we're going to open above the high. I will be getting into the trade, and then towards the close, I'm trying to get out, and I'm trying to scale out as well.
I love hearing a quant say there is no such thing as a perfect entry, because so many traders that don't have this type of information are looking for the perfect entry. It doesn't exist.
No such thing.
No such thing. All right, so what I did here, I went back to Tradestation and I pulled up a 15-minute bar chart, candlestick chart, I should say, and just of that day. So this way you could kind of just take us through, maybe you talk to us about how you scaled in or scaled out and how the trade worked.
Yeah, well, this specific day, the way it's set up, I was in at the open only on that day. So there are some extra factors I look at that determine when I'm getting in per se. But in general, I was getting in right at the open. So I got in, I think, within 2 ticks of the actual regular session open that day. Held long. You can see, though, at any time frame, it continued higher the rest of the day. This particular trade got out about 10 minutes before the close, which actually it cost me a little bit of money that day, but it's still a nice trade. I was risking also I used 40% of the 5-day average true range at that time, which equated to about 10 points. So I was risking basically 10 points, ended up making about 10 points. I think we finished up 11 points that day.
So 40% on that particular day, but on the other chart, I think it said 20% of the
That was on a 15-minute range high breakout, and I was just
Okay.
showing the concept. If a trade can handle an even tighter stop, that's good information. In fact, in that particular situation, still had about a 50% win rate and a more than 2.5 to 1 return to risk ratio.
So one thing that's interesting to me is that you don't know where you're covering, right? I mean, you don't have a specific target.
On these types of trades, the really good edges I can hold till the end of the day. Some trades I will target 30, 40, 50% of the average true range or a technical level.
Yeah, because you have that stop that could be X wide, but the target is unknown essentially, right? So you're not looking at a percentage of what that ATR would be. So 40%, like you said, maybe it was 10 points.
Right.
And you happen to make 10 points, but in some cases, maybe you're only making 5, or some days you're making 50.
That's correct.
So are you just doing that so the law of averages over time it works out? So it's not really a percentage of what risk you're taking versus the gain?
Correct.
Interesting.
So I'm taking advantage of volatility. When volatility is there, I'm letting the runners run. And if it doesn't develop, it doesn't develop. But I know that the odds are in my favor, right? Almost a 60% probability of a winner by the end of the day. Now, as I use a stop, that goes down, but I still have very advantaged return to risk ratios. That's very important for me as well.
And what can I say? This was so interesting. Thank you so much for taking a day trader like myself into the world of a quant. This was great.
Thank you.
Thank you so much, Scott. Next up, everybody, Morad and I will discuss managing losses. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Welcome back, everybody. I'm now joined by Morad Askar. Morad, thanks for joining me.
Absolutely.
The mindset for effectively managing losses. Talk to us about this.
So one of the biggest things traders do as part of their development process is to do whatever they can and try to study their losses out of their data set. This is an impossible thing to do. So let's change the way we look at losses. Losses tend to be looked at as a something that's taken away from us. Yes, we do lose money. But if you think about losses in trading, really, it is just the cost of playing. The example that I like to think of is you go to a kind of a fair or whatever, and you want to win that big teddy bear. Well, it's not free. You got to pay something to get the chance to win. And if you don't pay, you're just on sim, right? You're just standing there. So look at a loss as a little token you have to pay up. Your loss up is something you have to pay up to have a chance at winning. So if you think of it that way, a loss is not such a scary thing. It cannot be removed from your data set. There is no such thing as a 100% winning system on and on and on. Losses are randomly distributed within your data set, and we don't know if this next trade is going to be a loss or a win. And so our objective is to take as many trades as we can and minimize the loss and maximize the gain. It is essentially the only thing we can control once we put on the trade. So if you put on the trade, you can't control if the market gives you the target. You can't control what it does. The only thing you can control, really, is how much you're willing to pay to have a chance at that win. That's how losses work, okay?
Yeah, and you are 100% right. It is the only thing we can control, right? And going back to the cost of having an opportunity to win, this is why knowing where you're getting out, we were taught in the pit earlier on, second trade first. You start to heal once you know the cost, because you're basically, like you said, well, this trade's going to be $500 of risk. The minute you get in, you've already accepted the worst case scenario.
That's exactly right.
So you start healing right out of the gates.
And it's there's less fear, there's less mind talk, all that stuff. So I'll talk about the benefits here. So the benefits of shifting our perspective on losses, one of the biggest things that you gain is, there's this great book I read called the Chimp Paradox, and it studies how under stress our mind, the way our thinking changes. And this happens to traders a lot. They start to micromanage a trade, they plot out a trade, they put it on, now they're feeling the loss or the stress, and then all of a sudden they're seeing 50 reasons why the market's going to go the opposite way, right? But if you accept your loss, you can maintain an objective view of what the market is doing. That chart that got you in the trade, you'll see it almost the same as you did before you put on the trade. This is a big paradigm shift that I've seen in my traders in prop when they switch from being consistent losers to flat to starting to gain. You need to accept that loss. It's a hard thing for people to do, but it's a big step towards really letting things play out. The second part is it becomes less difficult to hold a winner. So one of the big themes in your recent shows is, how do I hang on to these winners, right?
I wish I knew.
You hang on to winners by just accepting the loss and letting the trade play out per plan. 95% of the guys who put on trades generally interfere with the trade. They hear a buddy saying, hey, I'm getting short, and they're long, and now they're like scratching the trade or closing it. If you accept that, hey, I'm paying $300 to realize $600 or $900, my job is to just sit here. Unless there's a tweet or news or something, there's nothing for me to do. I just have to accept what the trade's going to do before I get into it. And then once we achieve that second point, you get this great thing where your edge becomes bigger because you're realizing multiple times the risk. So if I'm risking 3 and the market can yield 5 or 6 times, I'm able to sit through it and not kind of get shaken out on little pullbacks and things like that.
No, yeah. I love everything you talk about here, and I'm glad that you addressed a way to hold on to a winner. And it's mindset. It really is. Nothing in the charts is going to help you. You just have to have that mindset to be able to commit to holding it.
Absolutely.
Yeah.
And it comes from a lot of samples, right? So let's go back to our basic goal and job as a trader. Our basic goal and job is to make a bet where we have studied a potential for a win that far outweighs the cost or the loss, same thing, of participating. That's our goal. Identify something that's going to have a really good opportunity of paying you, and when it does, we want to get paid multiple times the cost of participating. The second big objective is to aim to pay as little as possible for that chance. So it's a chance. Every time you're taking a trade, there's a cost, and that's your loss. Your loss limit is your cost. You want to take as little as a chance, as small a loss as possible to figure out if your timing was correct, if your bias was correct, and if your sizing of the stop versus the target is correct. And the biggest thing to remember as a trader, you're not as good as your last trade. You're as good as a huge data sample of trades, and you're not going to have a chance at that data sample if you are betting 30% of your account on each trade. Well, 3 trades in a row and you're out. So you want to keep that loss to a minimum. Let go of those losses and relax with your wins. Sit back and let the market take your stop. Otherwise, sit back and relax. Let the market do its job.
This is how meditation has helped me so much.
Exactly.
And I know the same for you.
For me.
And this reminds me a little bit of something I've seen you talk a lot about. Aim small, miss small. Mm-hmm. Right into that, right?
Yeah. Aim for the little piece and try to catch as much as you can. And if you get stopped, it's okay.
It's okay.
Take another chance.
It happens.
Yeah.
Great insight, Morad. Thank you so much.
You're welcome.
Next up, everybody, we will hear from Dan Hodgman with Top Steps Moment of the Week. Stay tuned.
Why trade with Tradestation? It's innovative, easy to use, and totally freaking sweet. With powerful tools to track and execute your trades and low per trade commissions on stocks, futures, and options. Upgrade your trade at Tradestation.com. Why trade futures with Tradestation? You can trade over 80 products from home, work, or on the go. With a powerful, easy-to-use interface and prices that let you focus on padding your wallet, not emptying it. Upgrade your trade at Tradestation.com.
Welcome back, everybody. I'm now joined by Dan Hodgman. Dan, what's Top Steps Moment of the Week?
Anthony, so today we're going to talk about crude oil. John here from Wisconsin took advantage of a channel that crude oil had been trading in. It goes all the way back to June, as a matter of fact. As you can see here, we've got a couple trend lines just kind of showing a channel that this market traded in and created quite a bit of consolidation over quite a few different months. Led to some really great opportunities. And so John decided to go ahead and utilize this channel as his channel looking for a trade. So as we look a little bit closer here on our 30-minute chart, he kind of brought it a little bit tighter to define his extremes a little bit better. And over a few days, as you can see here, it's kind of boxed out pretty nicely. But he defined his top right here at 57.50 and his low down here at 56.30, 56.25 in that area. And he really loved this idea of trading off of extremes. It's one of the best ways to look for an opportunity and keep your risk really tight and find some really great trades in a market that's trending sideways like this. So as you can see here, 57.50, the market starts working its way up there. And as the market gets kind of close, up to 57.40, he decides he wants to be short in this trade. He says, look, I've seen this market come up multiple times. I think it's going to give me a good opportunity. Already today, it's shown a little bit of resistance up there. So he shorts one contract at 57.40. And unfortunately, the market turned and went against him. But he had to stop in at 57.60 up top there. He was looking for it to come down to $57. Nothing huge. Took a $200 loss when he was looking for a $400 win.
First question, is that this trader's normal contract size?
Yes, it is.
How much can this trader trade?
He can trade up to 3 contracts
Up
right
to
now.
3.
Yes.
Yeah, so we talk in this show, no one to be small, big, or
Exactly.
not at all. And took a small trade at the top of resistance and really respected the stop. So I like that this trade was small. Was it a plan? Didn't want to be in a full position?
Completely planned. Wanted to keep it small. Just starting to build his account right now. He's a newer funded trader. Just wants to start growing that account with us. And I think he really was patient in looking for this trade. Unfortunately, it worked just before. Sometimes that patience, hey, it doesn't work every time. But it allowed him to have another chance later on in the day.
Yeah, I mean, we talk a lot about how losses are the best lessons.
Absolutely.
Right? And he took a small trade for him, a small position, and really the lesson is look at, not everyone's going to be a winner, right? But he kept himself in the game. Like you said, later in the day, he had another opportunity.
Absolutely,
correct?
and I think it's so important to recognize if you stay within your system and you're doing what you're supposed to do, this is still a victory at the end of the day. Even though it was still a loss, he did everything his plan said to do, and unfortunately, this one time, it didn't work out for him.
Yeah, but I mean, well thought out process, stayed patient, kept it small, and lived to fight another day.
Absolutely. So a couple lessons in execution here. Losses are an inevitable and necessary part of trading. We all have them. It's going to happen. You have to be prepared and accept that. Tight stops allow for second opportunities, like we talked about. There was another opportunity later in the day, and one loss. My dad always told me one loss and one win will never make you as a trader or break you as a trader. So it's one loss. It doesn't mean it's over. You're going to live to trade another day.
Yeah, I love that. One loss doesn't mean it's over. Kept himself in the game. Great homework. Losses are inevitable.
Absolutely.
Great stuff, Dan.
Thank you.
Next up, everybody, Dani Sittloh will tell us what's on our radar using Wazzabull. Stay tuned.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Welcome back, everybody. I'm now joined by Dani Sittloh. Dani, what's on your radar?
Hi, Ann. Copper's on my radar. It's on my radar for two reasons specifically. One, because it's in the metals family, and I'm starting to get more aware of metals, especially if I'm dabbling in gold and silver. So I'm thinking about copper, not too sure of it, want to know more, using Wazzabull to help me learn more. That said, also second, it trades a lot and its moves overnight. And so that to me says, as much as I wish I could be up then, I need my sleep, right? So I also think in the back of my mind, okay, if I'm sleeping, I want my money to work for me, I'm gonna automate it. And if the probabilities are good enough in the indicators, then I'm thinking to automate and use Wazzabull statistics to do so, in addition to my targets, of course, right? Okay, so here we have a reversal strategy in copper. So all you people who are contrarians and like to fade things, a reversal strategy is what you're looking for. Crosses above the 200-day moving average, it's a bearish alert. So it's a short-term alert, 3-hour outlook, 71% lower move, 29% higher move. I like this alert. That's what I'm paying attention to. The update report, it hits the lower target in 15 minutes. I really like it. There's no anything to this move. It just hits it. It moves lower, the momentum is lower. It's a reversal strategy, hits the target. I feel good about taking this trade going forward in the future. First time around. What I noticed then, 8 days later, it does the same thing, same probability. And what I've learned now around the 200-day moving average specifically is that as the markets continue to cross above, cross below, the signals get a little bit weaker, although the probabilities are higher, or the same, right? So, and I'll explain a little bit more as we go on. So 8 days later, same outlook, update report. Okay, so copper closed inside the predicted range, and we haven't really talked about it, but it's the predicted range between the targets. I really like to steer clear of the second time around in copper. Now there are other markets who may hit their targets in that second time around, but this one right now, in this specific instance, closed in the predicted range. So I'm thinking, okay, steer clear second time around. Interesting enough. Oops, excuse me. 2 days later, higher probability, same alert, 75% lower. Okay, well, I'm not sure why, but I'm watching, continuing to watch. All right, the update report follows momentum, not the reversal strategy, and hits the upside target, doesn't even flinch towards the lower target. All right, so copper, I think to myself, first time around that 200-day moving average, I'm taking the shot. Second time, I need to watch it. Third time, I'm leaving it alone, especially in this instance, if I'm letting this instance guide me for the future. But it doesn't end there, because with the statistics based on what Wazzabull gives us 10 years back, I can look, is this a normal occurrence? Is this an anomaly? What's happening here? It's just awesome. I mean, I think my learning curve has just exploded with all this information.
Couple things, Dani. First of all, great homework. When you're interested in a new market, Wazzabull's a great tool to get a feeling for it without having to trade it, because you're watching the reactions to these alerts. And the one thing that I wanted to point out that I wrote down was you watched these bar closes after the alerts. So that's pulling the trader out of you. Yeah. And this is almost like where I talk to a lot of traders about why I'm a hybrid type trader, where I have a system, but I know how to execute it better. I know certain things that occur that where I'm like, I might stay away from this one. And that's what you're doing with these alerts. And you recognize that when it closes up in that lower probability, that the higher probability, even though it's a higher probability target, it's an unlikely trade that you would take, right?
Yep.
And what I love about that is that when you're doing your automation, you could program that. And also, you talked about how the second time hitting the 200-day moving average, or the second time you got the same alert around the 200-day moving average, it wasn't as effective as the first time. So do more of what works and less of what doesn't. Program the first one, second one, don't do anything.
Yeah, exactly. And what I also love about this is I get to watch, the family of metals. So who responds in a momentum around their 200-day above or below, because those are two separate trades, and who responds in an opposite way, reversal or momentum. It's different. Copper responds differently, then silver responds differently, then gold responds differently. And it's amazing to me that I'm able to receive all this information and interpret it how I interpret it, right? Because we may see the same information, but interpret it differently because we're two different types of traders.
Yeah, no.
Yeah.
Great homework this week, Dani. Well done. All right, everybody. Next up in Beyond the Charts, Kim Bachman and Peter Rubnitz will discuss the importance of self-care. Stay tuned. Hey everybody, thanks for tuning into the show. To learn more about the charts I use, Wazzabull alerts, the basics of trading futures, and how you can even get funded to trade futures, please visit AnthonyCrudele.com. Now let me take you right back to trading futures. Welcome back everybody. Morad is still with us, and we are now joined by Assistant Manager Kim Bachman and owner Peter Rubnitz at Urban Oasis. Peter and Kim, thank you so much for joining us today.
Thanks for having us.
Yes, thank you.
I'm so excited. Morad and I both go to Urban Oasis.
That's right.
I love this place.
That's why you look so good.
Yeah, it's key in my lifestyle. That's why every time I come into town, one of the first things I do when I get to Chicago is go to Urban Oasis.
Oh, thank you.
I unplug there. Peter, tell us a little bit about Urban Oasis.
Well, Urban Oasis is literally an oasis in the middle of Chicago. It's a place where people come to get away, to get off the grid, as you said, and receive really superior massage therapy. And it's amazing how when they leave Urban Oasis, they're like a different person. They feel like their old selves again.
Oh, absolutely. That's why I go right when I get off the plane, check in, and my appointment's already made. I go in, and then you guys have the steam shower or the rain shower afterwards, and I get the humidity back in my skin when I come back to Chicago. I'm always dry. And Kim, you were talking to me a little bit about a new hot massage that a lot of people are doing. What massage is that?
That is a CBD massage, where what we do is we use a topical CBD salve and start using that, and the skin absorbs it, and it is amazing for pain, inflammation. Our muscles have memory, so when you're in the same position all day, whether it's you're looking at your computers, all of your screens, or your iPad or your devices, your muscles want to just kind of stay that way. So it's a great way to rejuvenate, helps with chronic pain. It's amazing. Yeah, we've had a lot of really great feedback with our CBD.
That's awesome. Morad, you and I, we both meditate. We both go and get massages. You and I, we do this to unplug.
We're doing the CBD thing next.
Yes.
I think we have to try this.
She just sold it.
She did. But tell me, Morad, why you go and get massages, why you and I both enjoy Urban Oasis so much.
We're sitting all day, right? And it's a stressful job, and we're kind of stagnant. I try to get up and walk around. I try to move around during the day, but I got to tell you that by the time the day's over, I have the focal point for me is my shoulders. I get these knots, and these guys just knock them right out. So it's a good balance to meditation. It's a good balance to the stress that we experience just being day traders.
Peter, I'm curious, why did you decide to start this?
I was introduced to it when I was a teenager by my grandparents, who were getting weekly massages for about 50 years. And they both had incredible longevity. My grandmother lived to 100, and she attributed a lot of that to her massage. And I had a couple other careers, a couple of other lives before this, and I was tired of working for someone else. Wanted to try something on my own, and this was something that I had always loved. And we wanted to do something that we hadn't found in Chicago, which was a place that performed massage in the right environment.
I love it. You know, I'm really glad that you did. Kim, for people out there that are maybe haven't gone to a place like Urban Oasis, tell us a little bit about the experience and the choices of services that they could have at Urban Oasis.
Absolutely. Well, the great thing is when you first arrive into our spa, we're going to offer you our spa sandals so you can start getting comfortable in your shoes, taking those heavy winter boots off, especially right now, have a nice cup of hot tea or an exotic juice. And then the massage therapy will start with, almost all of our massages are very customizable. So it's not like you have to have a head to toe massage. If you're feeling like, hey, my neck, my shoulders, my low back, that's what's really killing me the most right now, you can focus just on that. All of our therapists, we have over 65 different therapists, all of them very unique and have been with us for a very long time. I personally have been a massage therapist as well for over 10 years. And just the uniqueness that you can create within each 1 hour massage, or longer, of course. But if people are not used to maybe massage or receiving massage, aren't comfortable with getting undressed, we even have a Thai massage where you're actually fully clothed. The massage therapist putting you into different stretching positions, yoga type positions. So there's really something for everyone in there that can really get you relaxed and ready to tackle the next day.
Oh, I feel refreshed every time I can tell you that. Peter, before we let you go, tell us a little bit about where people could go to learn more about Urban Oasis.
Well, sure. If you want to go on our website, it's urbanoasismassage.com. We have a Gold Coast location on Maple Street between State and Dearborn, and a second location at North and Sheffield.
Excellent. Yeah, and on the website you could go through and look at all the different therapists and the things that they specialize in. I love it. Peter, Kim, Morad, thank you so much for joining me today.
Yeah, well, thank you very much.
Thank you, Anthony.
All right, everybody, thanks for tuning in today. You can catch all of the episodes on anthonycrudele.com, and you could follow me on Twitter and Instagram. See you next time. All right, Morad, right in the center.